So the recording version will not cover everything which we have discussed so far. Share. I hope you can see my screen again. Can you just put in the chat box? All right, thank you. Thank you. I appreciate that. Let's go back. My apology for starting the recording late. So that's how the methodology works. We identify our uptrend through our TR indicator, and we also need to focus that market should be in our favor as well. And when I say market should be in favor, what does it mean? It means that if I go to stock chart, that's the software that I use the most, and I go to maybe market, which is SPX, or S&P 500. So the S&P 500 is above its 50 days moving average. Right here, you see this blue line. That means my experience is that when S&P 500 is not above this 50 days moving average, most of the stocks will struggle and the breakout will fail. So when I say the market is in favor, it means the S&P 500 should be in this kind of pattern. If it is not, then we should be extra careful and should look towards defensive sectors rather than aggressive sectors. For example, this particular period between the end of 2021 and 2023. This period was very challenging. S&P 500 was struggling every time when it was trying to move up. It came down. It moved up. It came down. It moved. This is known as cyclical bear market. It's not a bear market itself, but it can give you 20% correction within the S&P stocks, and which means that overall it will spread to entire market. Once it comes out above this and stays at this particular level, then the market is in our favor. And then we can take aggressive stance and aggressive stocks as well. Otherwise, we should look for defensive area in this particular time frame. So market should be favorable. Right now it is, and we hope that it will continue at least for next 2-3 months. Then analyze if there's enough momentum to move the prices higher. That will come through our TR indicator. I will explain it in a moment. Then we will aim for initial profit target of 15 to 20%, and we will encourage to take partial profit around, maybe if we're targeting 25% or 20%, so around, let's say 15%, you should take some profits, maybe 33%, maybe 25%, or up to 50%. Why? It will make you feel better and you'll have some money in your pocket, and then you can let the rest of the position ride the trend and maximize the profits. And then evaluate it at its go high, whether it's a sell signal or not. And then you should minimize your losses. That should be our priority number one, to preserve our capital up to a maximum of 8 to 10%. Sometimes that especially in the case of Apple, long-term leader, not necessarily Apple, we can go beyond 10% if we have a cushion. And if we have very strong conviction that the strong will eventually move up and go back. It could be a trailing stop loss. If you could have a trailing stop, if the position is giving you 15% profit, then move it to break even, so that even if it goes back, it does not go back and give you loss ultimately. And we also adopt a trading strategy based on our TR indicator. Now there's too much of verbiage here, and I don't want to obviously when people start reading this, I will explain how the TR indicator works and how can we do that. I don't see any questions so far, and if you have any question, I would appreciate if you can ask me the questions towards the end of the meeting. Based on this criteria and this decision flow, when we come up with the stock, we monitor their performance, analyze it, and then we update it through our weekly commentary. In the weekly commentary, it's on my website. Every week we point out the performance of the existing stock as well as any new stocks. We also see what economic events are happening, and how each sector is performing. And there are quite a few other things as well. So that's ongoing thing, and that you will have through my website. So let's take some example. For example, for the today's discussion, I will analyze these 4 stocks, and some of the colleagues have already asked about, for example, AMD and Oracle, and Carnival is my pick, and Planeter. Then how do we analyze? Okay, let's say we have a list of these through this process, which I explained right here. Question about the Excel is just work for Excel for Windows. The software works for Excel for Windows for now. Okay. But the weekly commentary which you get is independent of the software and the stock picks. So you can have that weekly commentary and the picks, and you can analyze at with your own system and through your own charting platform as well. So let's do one by one these 4 stocks which I explained listed here: Oracle, Planeter, Advanced Micro Devices, and Carnival. And let's see what our system says, and how should we go for it or not as we speak now. So starting with, hopefully you can see it. You see, I have these 4 or 5. I have TSM as well. Okay, Taiwan Semiconductors. So we put a list. We just put in an Excel cell the name of the stocks. We go to our stock analysis menu and put this, press this button, get table info, and the Excel will analyze and give you this information. For example, since it is through Excel, it's a bit slower. It might take, for example, this 4 or 5 might take 30, 40 seconds. So I want to save time. I'm not repeating it. For example, Planeter. Its last price was 80.55. This was the volume shared. Its 5 days performance was this, 1 month was this, 6 months is 215%. What does TR indicator say? The TR indicator, our own says strong buy, and it gives you an arrow, meaning that it has just turned a very strong signal, buy signal for this particular indicator as of today. So we should look into it. And its 52-week performance is also that it was 367% up. And mini chart is a very small chart of showing you the for last 6 months is, or whatever period you select, is performance. See, it's all green and it's increasing. Now compare this performance with AMD, the 4th one here. It has been negative, and the TR indicator is saying is strong sell. Similarly, Oracle is saying strong sell, although the Oracle's 52-week performance is 63% up. So we will analyze what is happening with Oracle, why is saying strong sell, and what is happening with AMD. And you see the red mini chart for AMD is showing us that this particular stock, AMD in this case, is not very favorable, and it's not performing well for last 6 months. As we see, it's minus 26%. That's why it's red. So let's move to our main sheet, and we want to analyze, for example, Planeter first, or maybe Carnival first. Okay, CCL. So we put the name CCL here and press the update button, and it gives you all that information about Carnival. This is what Carnival does, where it is head office. It is in Miami, Florida, and what it does, it has a portfolio. Carnival is basically a cruise operator, and it runs cruises to mostly Caribbean and other and European spots. I think it's basically a European company, but they have incorporated here in US as well for tax and other purposes. And this is its recent performance. Again, it's telling me that for last 1 month, Carnival was down. And it's not giving me the new high. So last 1 month, if you see the chart here in the right, it is consolidating kind of thing. But it has given us a buy signal, and this is a TR indicator saying a strong buy. It means that it has performed, something has happened. And what has happened is was 6.43% just last working day, which was Friday. It gives us some levels of its stop and losses. It also tells us some resistance, support and resistance, especially for the day traders if you want to have it. But if you're not day trader, they may be or not that useful to you. Where are the support and resistance for this particular stocks? They lie. But let us analyze it in details. So the Carnivals for 5 years was minus 46%. What happened to this company? It performed really, really bad during COVID. But after the COVID, for last 3 years have been very good. It has given us 42%, YTD is 55%. It means that it was balancing out here. And here we have this seasonality effect as well. How does the CCL perform against S&P 500 during last, we have selected 10 years, we can go for 5 years. So let's update the chart for 5 years. Now it's for 5 years. Somehow, maybe the data is not updated for here. 1 second, let me run this again. And the Carnival, as you will see, it has a strong seasonality against S&P during the last quarter of the year. Here's a chart for Carnival. I updated it again. So now this is telling us that Carnival has last 5 years beaten the S&P 500 by 10.5% in the month of November, 5% in the month of December. But in January, it is slightly negative and it has beaten S&P only 40% of the time. And February is also kind of negative. So it means that January and March especially and the July, those months are negative for Carnival, and especially the month of March and July. Carnival has never beaten S&P 500 and has given you minus 12 and minus 12% again in July. So what is the right time for this stock? So this stock is kind of choppy, means it's more riskier. It has not given you a consistent performance because of it's discretionary. When the COVID was there, no one wanted to travel, no one wanted to go to the cruise. So that's why it has problems for years. But we will go into some more details. And what are those details? Let's plot the Carnival here outside our system. Go to, let's see whether it is performing others or not. Now this is the group. Carnival is underperforming its group for some reason for last 6 months. Initially it was performing very well. It's a ratio chart and is also kind of at par with S&P 500. But the group itself is performing very well. This is the group in which Carnival is, and what is the group name? Recreational Services, Consumer Discretionary Recreational Services. And it's part of the XLY sector, and XLY sector is the discretionary sector. It is performing much better during last 4 or 5 months against S&P. So it means the Carnival has picked up. And let's go to the daily. In the daily chart, you see Carnival for last 5 or 6 months is leading its group right here. Let me again annotate here, put the spotlight. So it is leading here. It is, and the Carnival is leading against S&P 500 for last 5-6 months. From this bottom, it has come to all together with this, and the group also is leading the S&P for last 5-6 months. So it's basically more likely a very recent phenomena. So should we go for it or not? That's the question. The Carnival here, as you see, has broken out and it found support at key moving averages. It's very close to its all-time high. The season is with us. It is beating its group, leading in its group, and the group is also leading the S&P 500. The chances are there that the Carnival will break out this 27.17 all-time high, not all-time high, at least 5 or 6 years high, and will go to new highs, especially with this kind of volume. Look at the volume. Volume was quite high in this particular, on this particular day. So it is trying to break out. Now it depends upon you. Are you an aggressive or a conservative investor? I would say that it's worth it, because if the Carnival goes back and falls below these moving averages, especially this 50 days, which is 23.89, then it will be an exit signal or sell signal. We will get our position, we'll get out of this position. It's around 10%. Is it 10%? 2050 period is around 11% right here, 23.89 minus 11%. So in other words, we can go for Carnival, but we need to be aggressive and we need to understand that this stock has already moved quite a bit during last 5 or 6 months, starting from 14 to 27.8. In other words, in last 6 months, this stock has moved around how much? 67% right here. So we need to understand that it could be a late stage breakout and we should not expect that it should move 100% immediately. No, what we are expecting here, going back to our this chart, it will move beyond 27.17. I will give us something around its previous high of 31.52, which it made in 2021 just after COVID. So that's, in other words, Carnival could be we can select Carnival for a very short term pop up, because Carnival is kind of a choppy, it's a highly cyclical thing, highly dependent upon the business it has. If, God forbid, for example, there is another pandemic, something like that, the Carnival will do same thing, like it'll drop from 66 to 7. We don't want that. So we just would like to get out of the stock within 8 to 10% of loss. And for the timing, it gives us a buy signal. I hope I'm clear in this. If and you get our approach, especially when it comes to Carnival. Now let's analyze Oracle. Why Oracle? Because I was quite optimistic about Oracle in my commentary as well, just 2 weeks ago before its earning. But in earning, it has a surprise. And because of the surprise, there was a sell-off. Now, Oracle is a very established company. Our TR indicator again is giving us a strong sell signal. For last 6 months, sorry, 1 year, it was 63%, and 6 months it was 18%. So what happened to Oracle? We need to go into the details of Oracle. If we go here and from this slide, or I type the Oracle symbol here, and the chart will update. Get the data for it not only gets the data for Oracle, it gets the data for the sector as well as S&P again, updated, and that's why you see a bit of few second delay, and then it's right here. So the Oracle is updated, and you see it has a sell off very recently. After this is a seasonality factor, and Oracle has underperformed for last 5 years for some reason. In December, January, and February, S&P 500. So season is not in our favor, but starting from March, especially during the month of June, July, and August, June and July, Oracle has normally beaten S&P 500. That's one thing. Let's go to the TR chart of Oracle. This is Oracle chart. And let me explain the TR indicator. So the trend recognition indicator, if you see these green rectangle, this is stage 1 of uptrend. Those light green bars, that's stage 2, and the solid green bar is stage 3. On the flip side, this red diamond here is the first stage of an uptrend, and this means the stock is likely to go further downwards. So we had this right here, and see, just a few days ago, that was which day? 10th of December. So 10th of December, we get this signal. Now let's see, we were here. After this signal, should we remain in this stock? Yes or no? No. It is telling us the trend has changed from green, and now the TR indicator is telling us that you probably will see weakness and it will go down. It's exactly what it did. Then the second stage, and now we are in the third stage, which is strong sell. Light orange, and then there's a TR indicator bands, color bands. This is the upward band and this is the downward band. We should stay away from the stock as far as the TR indicator is telling us. But Oracle is interesting. Every time when it comes and go to the strong sell, it has a strong sell signal. Normally it makes a U-turn. You see this point, and this point. So this point. So we need to understand what happens with Oracle, because Oracle is an established company, has established business. It has almost $500 billion company. It's been there for 4 decades. It has cloud business, it has database business. So people generally like Oracle to come down, and then at moving averages or at some very good suitable point, they start buying it again and push it upwards. Question is whether it is going to happen this time or not. Now, if you are conservative like me, you don't want to put unnecessarily money on a stake, then you should wait. And where should we wait? Let's go back and check Oracle stock here in stocks charts. It will give us a better idea because this is a professional charting platform. Every time when the Oracle's, this is PPO, it either goes up across this line, across is moved from below this point to the moving above moving averages. It gives you a buy signal and it then keeps on moving. So in Oracle, this is Oracle monthly chart, so it's a very broad chart. Let's drop. This is a recent day chart. In other words, for the Oracle, we should wait for a pattern. The stock is underperforming right now, is below 50 days moving average, is on the lower Bollinger Band. And when stock is like this, normally it has a tendency to roll over and go down. My own estimate is that stock will eventually go down and test this gap level right here at something around 155. Now, if you want to be aggressive, you can go here, but you have to give a big margin from 160. What is the price here? 169, 169 to 150. If you are a bit more conservative, put it on a watch list and watch it for 155 level, because it's most likely, this is the gap up. It's most likely after this sell off to get further support, as it has always been doing and going up, unless there is something fundamentally wrong with Oracle, which is not. Oracle is slowing down, has a high PE ratio, is 41.52, but it is still a solid company with a solid business. So we can count on that, okay, the anxious investors and the people in waiting, people like you and me who will be waiting for Oracle, they will come back again, especially when it close to this gap. Now, whether it will close and come down here, anyone's guess. Nobody knows, obviously. But most likely is that Oracle will come, or if you are aggressive, you can even take a chance. And but my strategy on the TR indicator is saying no for the time being. So sometimes you have to go beyond that and understand in the complete 30,006 feet elevation picture that what is happening with this particular company. So for the time being, sorry, my methodology, we need to wait till this level is acquired for Oracle. I hope I'm clear on this. Let's go and evaluate AMD. Now AMD is interesting. AMD, but again, there is a strong sell signal. It's underperforming in 5 days, 1 month, 3 months, 52 weeks, 6 months. It will, this is a question on the Oracle if it goes 155. So very quickly, let me answer this question. If it goes below this level, then it means then there's something wrong with the Oracle and it is likely to touch this level, which is again a strong support. But a company like Oracle normally does not perform like that. Normally stocks close those gaps and then rebound. And in case of Oracle, you see Oracle has always rebounded when it comes down from its 50 days line. Now it is below 50-day line, so it's time for it to rebound. And the more it comes down, more the chances will occur, especially if the market is in your favor. If market is not in your favor, then it is another story. Because if the market is not in favor, especially in the semiconductor or technical stocks, it can play havoc on stocks. We need to be careful of where the market is. If the market is in your favor, then obviously you can count on that Oracle will eventually get support here. It might get support right here where it is, but sometimes what it does, it only bounces and then roll over. Anyway, coming back to the AMD, we were probably discussing AMD. So let's see what is happening with AMD. AMD again weak, having a strong TR indicator signal. This is strong sell. See the red chart for last 6 months showing you minus 26%, while the Planetair has gone up by 215%. So where you would like your money to be, in Planetair or AMD? Obviously Planetair, but AMD we have to go in further depth and see its fundamentals as well as understand what analysts are saying and why it is happening to AMD. Is it too pricey? Is it had too much competition? So let's analyze AMD. Full symbol for AMD in Excel is XNAS. XNAS stands for Nasdaq Exchange. Otherwise, AMD is traded on many international exchanges, and it can bring another AMD from another country. For 5 days to one, look at the performance of AMD. 5 days to 15 years. AMD has been for last 3 years underperforming it, and it's negative. And its TR signal is telling me, look at the overall signal. They are short-term trading signal, they are medium-term, and they are long-term. 77% sell, and our TR indicator is saying strong sell. And this is the AMD chart. Should we go for it? Obviously not, right? Just looking at this figure. But again, there's some but. There's a history behind AMD, and AMD has a history of, let's go to AMD, coming back strongly. But this time it's been too long. Every time when AMD comes down to this lower Bollinger Bands, this time I was not expecting it come to 120, but on the weekly chart, there is a support at 115. Right here, which is 200 days moving average on weekly, which is a very strong support. So unless there is something extraordinarily wrong with AMD, I mean, the market is bearish, the market has gone down, of semiconductors not selling its products, something wrong like with Intel, then AMD is likely to find support and go up. Now that is for aggressive investor. For conservative investor, I wait for signal like this, that when a strong move back crosses the moving averages and in high volume. So now obviously you will miss some of this move, but you have always strong chances when a stock does this. It goes back. Right now it is under is 50 days moving average and 200. So it's not a buy from the TR indicator strategy, but from aggressive point of view, it's very close to this particular 115 support, and we can go ahead and buy and take a chance, because what will we will lose $4 or $5 per stock. If we just buy 50 empty stock, we will end up losing it. So the risk to reward ratio is high. Even if it goes back and touches these, you see the 2 or 3 moving averages that converges here. So that's going to be resistance 145. You will still get, against a $5 raise, you will still get $25 of advantage. But some people are forecasting, which I don't believe, that it will go eventually and touch back is 227. When I say I don't believe that it won't do it immediately, but I believe it has the potential to do it. It has done it in past, and it was at 227 in February. So for the time being, should we wait or should we go ahead? According to my information and system, we should not, because it's a strong sell. But if you are very aggressive, you want to take some extra risk, so go ahead, your call. So I hope you understand how do we analyze. Another is Planeteer. Planeteer has done extraordinarily well. 367% in last 52 weeks. So what is it doing? Let's analyze Planeteer. And one thing I see in Planeteer, that it has again given a strong bias daily signal. And just arrow means it had just given it on Friday. So that's the time now, according to TR indicator. This is TR indicator chart. Change it to Planeteer. Where is Planeteer? Right here. And for last 1 year, let's update the chart for Planeteer for last one year. It has updated the chart for 1 year, and you see this is whatever Planeteer was doing it. We can change the move between daily and weekly. Right here, we have option daily and weekly for the TR chart. And for the main chart, we have option right here, daily and weekly, and also in the menu here, daily and weekly. So we can just move back and forth between daily and weekly. So you see, Planeteer is, I mean, it looks like it's another NVIDIA, and it is for the time being. Problem is, that when the stock moves like this, it's moving, it's known as base on base pattern. It creates a small base, move up. It creates a small base, move up. It creates a small base, move up. So is it a buy? Yes or no at this particular time? So let's first update it for the weekly chart. So give us a broader horizon. And this is weekly chart. You see no red here for last 1 year. No red. It's all uptrend. So where was the original point for the Planeteer? This triangle here and this green bar. It was very close to its moving averages. Let's say that it's on your watch list, you see its TR indicator, it gives you a signal. Should you go and buy immediately? If you are aggressive, you can. But if you're not aggressive, you would like to wait it here, come back, test this moving average, which is 9 moving average, and then go back again. That's the point. You now understand that people are not, the investors are not letting it drop below, and with a very small loss here between this and this. And look at the reward. So that's how you play it. You want to have a high reward compared to a low risk level. Now, question again, we are here. We have already moved this much. So is it a good buy or a bad buy? For this, we need to go further and dip into, go beyond the TR indicator, look at what Planeteer has done. We can select Planeteer from here as well, and look at what signals are saying. But one thing we need to understand that it could be an overbought territory and it could be an extended stock. But when market likes something, it is very close to its all-time high. Number one, it has 62% buy indicator and a strong buy TR indicator, as we said. But it's quite far away from its 50 days, 24% from 50-day moving average, which is this one, and 12% from that one. Okay, so it's a riskier stock. Obviously, we need to understand that it has a higher level of risk, not for conservative people. So should we go for it? Let's analyze here for some more details. What details we are looking for here? Planeteer is on a run. It is beating its leading its group, which is DJUSSW. What is this group? Software group, technology software group. And the software group itself is at par with S&P. At least it's not beating, but it is performing well. And Planeteer is beating S&P 500 as well. So, and the industries, your sector, technology sector is also performing well. So Planeteer is done well. On a weekly, it's right here. It's extended, I would say it's extended, but it's what its price action is telling us is trying to break this level 80.91, and it is trying to do it in volume, high volume. So for aggressive investors, yes, you can take a position. Where should you be stop loss? Since you are aggressive, so your risk should be also be aggressive, and you should not risk all the way down to this level, which is a gap or here. You should just target the last low level, which is 70.27, slightly above than 10%, not beyond that, or maybe 8% right here. And where should be your upward target? Now, if it crossed 80.91, it's anyone's guess because it's an all-time high. But normally, it goes beyond that. It tests the 100 level and come down. There was a question on the PE ratio and the past 1 year performance. Yes, I will show you a slide. We'll show you the success rate for the people who have bought this and one customers actual performance. And PE ratio, yes, we take a look at the PE ratio, which is right here, which is very, very high. S&P average PE is just around 28-30. Now, why it is very high? Because market loves this stock. And investors are just after this and trying growth stock. Normally, PE does not matter. If any growth stock, you take a look at Nvidia, you find it's 45. You take a look at anyone else, you'll find it's Amazon. You'll find it something like maybe at time 200, 300. That happens. So at times you need to ignore the PE ratio because the market is trying to push it, and it has done it. We need to understand that this is a riskier thing because market has already advanced. There is a chance for 100 making 100. Yes, there is a chance, especially from the RSI is still not above 70. When RSI is above this level 70, is kind of an overbought territory. So things are in our favor. I think This is again my opinion. For the riskier and aggressive investor, it will go beyond 100 level. Someone was mentioning MSTR very quickly here. I can check it. MSTR is not recently performing very well, although it performed well on 11.56. It got a support here, but it is leading in its particular group, which is again software, which is MicroStrategy. And MicroStrategy, why is underperforming recently? Because MicroStrategy has invested a lot in Bitcoins, and recently Bitcoins for last 10 days is coming down. So we will look into MicroStrategy in details as well. Coming back to our Planeteer thing. So we come to the conclusion that Planeteer is a riskier bet to go, but we have tailwind and we can try it. So among these, we have evaluated PLTR, CCL, AMD, Oracle. What is left? TSM, Taiwan. It's a neutral cell. So let's evaluate Taiwan. And Taiwan Semiconductor has performed well as well. 97% return in 52 weeks and 12.45% in 6 months. To save time, I will not look into everything. For NVIDIA, you can read my weekly commentary. We can look into weekly commentary, and I will do that. And for the top 5 performing stocks, if you go into the one particular group, for example, you want to explore this technology software group, and the software group is DJSUSSW. Unfortunately, Excel does not support this Dow Jones software groups. It supports stocks, but not the groups. StockChart has a tool for each particular group. You can look at its members and who is outperforming, who is underperforming. So let's go back and let's go back and analyze for the timing. What was the stock? TSM. So and TSM is an interesting stock. It's neither a strong buy nor a strong sell. It's a neutral sell. So it's an interesting stock. Now we have to move beyond TR indicator and apply our experience and analysis skills to analyze TSM and whether it's a buy at current levels or not. So here is the chart for TSM. And as you can see, TSM is consolidating. I can zoom into the chart to make it look better, or zoom out as well. But TSM is kind of an consolidating or kind of an underperforming zone for the time being. What is happening with TSM's seasonality factor? TSM outperformed S&P 500 based on the last 5 years. 80% of time in November, 60% of time with the 2.15% performance outperforming S&P, but TSM loves January. 80% of time with a 6.1% higher profit return than S&P 500. February, neither here, neither there. Then February to April is not a time for TSM as far as seasonality is concerned. It gives you negative return. So in other words, probably this is the time for the TSM, but this is a secondary parameter, secondary factor, not the primary one. What are the primary one? Primary one is that our 62% of technical parameters are saying that TSM is a good buy. Is TSM leading its peers or not? Very quickly, TSM is leading its sector right here. Is 3 years 71%, the sector is 42%, 5 years 240%, sector is only 159. 6 months is 12.45, sector is only 3%, 1 year is 97%. So TM is doing much better than its sector, technology sector. Within its group, for that, we have to go back to this chart and go to the stock charts and see how is TSM doing. And TSM is again doing better than its overall group, which is semiconductors, technology semiconductor group. Technology is sector, semiconductor is group. And the group itself is almost at par with S&P. In fact, it is better. It was initially 2.6 ratio and now it's 3.3 within 1 year. So it's better overall compared to S&P 500. Now let's analyze here. TSM is right here at its key averages. Okay, where is the buy point? right here, 205.5. If TSM goes back, it's consolidating, going up, down, up, down, up, down, up. If it is goes beyond this 2.5.5, then it's a breakout. You will have to check the volume, and if it is on higher volume, it's still not in the overbought territory, as RSI technical indicator says, then we can look beyond this to test this level and go even beyond that. Should we buy it at the current level? Again, we are very close to its moving averages. What is the behavior of TSMs and investors? Higher lows. Every time TSM comes, they push it higher. Every time it comes, they push it higher. It means unless something fundamentally goes wrong with the market or the TSM, it will not come down and go below this level. So for aggressive investors, we are at 197. It means that we are facing resistance at this 200 level, and then 2.05, and then we can enter here with a stop loss below this 50 days moving average or this last low 189.77, and then we can go move beyond this. Now, as far as the compliant stock, I understand that and this, but let me tell you this. I don't know why Zoya tells the TSM is not compliant, or CCL is not. CCL is in entertainment industry, cruise, and Planeter is in technology sector. It develops drone technologies and software for those. So what Zoya might have their own kind of uh, kind of reservations about them. That's why this is non-compliant. But it's not in that kind of business, which is, we can say that these are secondary filters. And I have customers, both Muslims as well as non-Muslims. So we are just considering stocks here, and anything which is grossly wrong, like something like in alcohol or other business, we will not consider it over there right away. So coming back to this thing, TSM. In my opinion, TSM is an interesting position. It has a neutral TR signal cell. If it breaks out, we can have it in watch list. If it breaks out beyond 205.5 or maybe 10 cent up, then it's a breakout. We should go for it. We can even go for it now with this very tight stop loss of only $8, which is 4 or 5%. Not bad. We can take this risk, even 8%. We can even go, and I don't think that TSM in any case will fall below 177. That's only my analysis. Obviously, TSM is strong, but seasonality, when we saw the seasonality, TSM performed much better in January and February and not in March and April. Okay. So that's how we analyze. We put the stock here, we get all the information, see this is stop losses and target, we see the technical indicator, we see the TR indicator, which is telling us whether it is in a strong uptrend or downtrend or whatsoever. All right. So again, it's up to you whether you decide it or not, because I have customers vote. Some would like PLTR, some will not. It's again for you to decide to go for a PLTR based on Zoya's recommendation or not. But that's where secondary filters come into play. Now let's go back to our presentation, and there was a question on the strategy performance. So that's how the strategy performed during this is our as of 10th of December. So last 14 months, there were, according to this study, there were 58 winners. 58 winners, and average analyzed return. Losers, there were 22 losers, which are right here. Now these losers are beyond our 8% maximum loss. So what I'm trying to say is that this analysis is not showing that you are exiting any stock. It's just showing if you entered that particular day, for example, 10th of last year, and this REVG or this Costco 12th of then it had given appreciated by 71%. So the most profitable was APP, Applevion, NVIDIA, PLTR, Exxon, DAC, TSM again, because in 1 year it gives us a more than 106%. Meta, which is Facebook, Shopify, GE, but there are others as well. At time they backfired. So what do we do? Remember, our maximum loss 8 to 10%. So we will not allow these stocks to go beyond 8% or 10% in any case. We will cap these figures right here. We will cap these figures. And while we try, what will you do? We will take some portion of our investment position at maybe 15%, 20%, and let the rest run. And that's how, if we just take a picture of all these, this includes complete return of the winners, 98%. But in theory, I will be honest with you, you won't get 98%. Why? Because at times we are humans. So human psychology come into play. A time when you have 40%, you say, okay, just get out of this thing. 40 is enough for me for this. It will come down. But what would happen that it will go from 40 to 185. So you miss on that. Similarly, if you do not take a stop, hard stop at 8%, 9%, or 10%, then it will go and can increase, has the potential to all the way up to 38% and beyond. Even AMD in one position, we took a position, we gave a signal, and we came if from that entry, which was 171, and right at that time it was 130 when I made this slide 10 days ago. So it was 23.7% loss. So we need to understand that we need to cap our losses, no exception beyond 8 to 10%. One is the question, how long was the stay or exit price? It depends. It's assuming that you are a long-term player. You need to exit the price when it's 8 or 10% loss, or you want to keep it moving on and on. So this is hypothetical performance. But one customer have taken many signals from this strategy. Last one customer shared his actual portfolio, and he has given us that he was able to achieve a 40% return. And I wish I can show it to you. I think I shared it on the group as well. 40% return, while the S&P was something around 28 to 30%. And that is our target, to at least beat the S&P 500. So I'm not saying that everyone who will have this strategy in place, they will make and go and make this, but you have occasionally these kind of winners, you will have occasionally these kind of losers as well. And you have to balance out. And these are the decisions that each person will take individually. I mean, some person might be very aggressive in nature. They can keep on. For example, I have Microsoft position maybe for years. I just don't sell it. Whether it comes drops by 15% or 20%, I don't sell it because I know the company, I know its product, and I know its history for the last 7 or 8 years. Some people, if the Microsoft sell by 10%, they will just sell it. So it depends upon person to person. Okay. Now, is there any other questions before I move to the last portion of my presentation? There was one question about the selling short. Now, I don't prefer selling short. Why? Especially in this market environment, when market is not in your favor. Let's see, you are here. You are selling short. From religious point of view, many people think, and I tend to agree that the selling short is not a right thing to do. But apart from that, you sell short here, it's a strong signal. Well, very soon the signal will reverse. Why? Because a strong market is a strong stock. This always happens in the case of good companies. Taiwan Semi Manufacturing Company, TSM, is a very good company because it has a long-term upward trend. This is a 5-year chart. Only this period probably was beneficial for short sellers. And even in that short period, there was pop-up bounces because the entire market was down. Everything was selling, being sold. So the earning and FOMC trading plays, no. Reason being, our strategy is not a very short-term strategy. The earning and FOMC normally they are for the day traders a very short-term, 1 or 2 days, because Normally the FOMC market moves, they are reversed within a matter of 2 or 3 days. So those are only for my experience for day traders or very swing traders at the most. This strategy is for more for people who either swing trader for 2 3 weeks or longer, long term trade. So for the TSM, I would say it's still a go. Why? Based on his history, his strength, is leading the group. Every time when it comes back here, I get this red diamond, it reverses. Every time, without exception for last 5 years. So if you're not very aggressive, then you can still wait and wait till it comes down again to this red line, which is 20 weekly line for now it's 20 period weekly lines, right? So the TSM, this works very well. NVIDIA, someone was asking about NVIDIA. Very quickly, we can go to NVIDIA as well. Let's put NVIDIA here and see what does our chart for NVIDIA tell us. It tells us this is not in the same symbol list, but anyway, override this thing. It will update the chart for NVIDIA and update it. Now this is a chart for NVIDIA for last 5 years for weekly. What does it tell us? Every time when it comes, because NVIDIA is a very strong stock. So people are always waiting for NVIDIA to come down, give them a better price entry. Every time when you have this kind of reversal signal, it comes down to this level on the weekly chart, it gives you a signal. So next time here, yes, definitely. Why not? What is the line here? 130. So let's hope that NVIDIA will maintain it. But before we make that decision, we need to go more in depth and do some fundamental analysis. Is there something wrong with the NVIDIA competition market? Because it's a growth stock. And growth stock, normally the PE is very high. It means investors are taking extra risk for NVIDIA. Everyone is loving NVIDIA until it does not perform. So what is the PE ratio and what is the other thing tell us about NVIDIA? NVIDIA's PE ratio is 52, still higher than the traditional S&P 50 rate. But the most of the short-term signals are sell, long-term is still buy. That's why the TR indicator is saying is a neutral sell. And if we go for NVIDIA at this price, what should our exit should be 8%, which is 123.92. We don't need to see the performance for last 5 years. It's 2,151% for last 5 years. But very quickly we can go and check that whether NVIDIA is still leading is stock. Maybe NVIDIA is just taking a breather. Now NVIDIA is below its moving averages. When we are here at the below moving averages and especially close to the lower Bollinger Band, every time stock's trying to move up, it rolls down. It is natural. It will face resistance. If NVIDIA breaks out this position, then we can make a case for a new entry for NVIDIA. For the time being, maybe or maybe not. My experience with these charts and NVIDIA is every time when the PPO move back up from 0 to positive, every time, like here, right now is gone back negative, right here, it gives you a move up. So maybe we can wait for NVIDIA to move up, let this PPO become positive and come here. There should be a buy point around 140 again. Whether it can come down, yes. It failed here, it can again come down here. So there is a risk. Okay. So for CMG, you can read my weekly commentary. I have CMG over there, and I think CMG triggered a sell signal very quickly. Yes, but CMG is still at a good position, finding support, and we hope that CMG will probably come back. Initially, I think started coverage CMG when it was here, something around 61. It is back to that place. So that was about the stocks and the performance, and I hope you like it. And this is a question: how do you identify stocks that are in uptrend due to hype and showing strong short-term indicators, but either hype or manipulated? Good question, Hanif. You take a look at its relative performance. This performance. relative to its group, relative to its peers. And you don't only take for any particular stock. For example, you take a look at NVIDIA or any other stock, maybe Shopify. Someone asking me about Shopify. Okay, Shopify. What does it tell you? Shopify is a leader in its group, at least for last 5 or 6 months. And again, an index as well. And the group was underperforming, but recently has improved a lot. What it is doing on weekly or monthly basis, we go increase our broaden our horizon. Broaden our horizon is not performing very well in the long term against the group and in the index itself. So what does it mean? A lot of chop here. So if maybe there is a hype among the Shopify, but once Shopify faced this sell-off 176 to 23, then it is chopping around. So now question comes whether it should go here or here. I would say Shopify is a riskier stock, is chopping around, and the better place for Shopify is when again the PPO comes positive at these levels, not at these high levels, because there are always strong chances that the Shopify will roll over, come back to this moving averages, and if it finds support, it will go back. Another thing that we look at the volume as well. When uh, and then we look at the fundamental as well. Like, how do you find the fundamentals? Fundamental, there are quite a few different sources. Let's see, this is for which stock? TSM. Look at the TSM's fundamentals. It's giving you an annual ROA is 25.48, and it is change in fund in owning a stock is 1%. And last 8 quarters, the funds are increasing its ownership, mutual funds. What it's telling you that Wall Street is accumulating these stocks. It's not hype. Continuously, funds are pouring into money into this particular stock. It is giving you annual ROE, and it is increasing is from the fundamental. It is increasing is earning last by 30%. Again, very good performance for TSM. Now take a look at the someone showed me LCID or something like that, or a weak stock maybe. I don't know. Let's see. Try a weaker stock. LCID, Lucid Group. Here we go. Lucid Group. Look at its performance. Tax margin minus 449%. Annual return on equity minus 58%. Change in funds. Funds are withdrawing money minus 9%. You see this? It means that Wall Street is not pumping in the money, it's taking out the money of this stock. Quarters of increasing fund ownership? No increasing fund ownership. Sales, yes, sales was increased, but there was no earning. Earning was changed by minus 4%. So it's not appearing in our EPS. Our EPS strong performing earning worksheet. Tesla, Wasim, it's in my weekly commentary. If you go to my weekly commentary on my website, I will hit update tomorrow. Tesla is there. Hopefully, you will have some Bitcoin. We can do that. Actually, the original TR indicator I developed was a Sierra chart. So this is my original TR indicator, and then I developed it for the Excel. So this is GBTC, a Bitcoin proxy. Someone was asking me about Bitcoin. Bitcoin is interesting. Let's analyze the Bitcoin from our TR indicator point of view. Just assume that this is Excel. Okay, you find the same chart in Excel. This is a more highly professional traders platform, Sierra chart. Every time when it turns green, especially this, it has a run, except for a few occasions in the past. Now, if you want to have a broader horizon, move to the weekly. If it is close to these moving averages right here, what was the problem? It was away from the moving averages. Here, it was close to the moving averages. Here, what is the problem? It is away from the moving averages. So either the moving average will catch up, or the in this case, it is Bitcoin. Bitcoin ETF, GBTC. It will drop here. If it again move like this, then that will be an entry according to TR indicator at this point. When it is again moving like this, it will show you a lot of momentum, and this momentum will move it to certain points before it starts consolidating. So that's how we can use the TR indicator on the for the Bitcoin. All right, for the paucity of the time, we obviously we can, there are thousands of stocks and people are asking. I can take a look. You can send me separately, and I can, if possible for me, I can send responses individually for them. But hopefully you like this software. I can put GBTC here and then analyze again whatever you want, GBTC, and then it update the things entire thing for Bitcoin proxy, which is GBTC in this particular. Now again, this is saying TR indicator is saying neutral sell. It means that recently there have been some performance, but look at the performance. 5 years, 761%. Why? Because this is Bitcoin. Okay, coming back here, the software makes TR chart, it allows you analyze. And by the way, you're not just limited to these 5 or 6. You have plenty of different technical indicators developed in this software, and you can select as many you want, but it will make the, obviously to update it slow, because TR indicator takes a lot of resources to plot and calculate. And all these things you can compare it, but a list of stock right away in this particular fashion. You can maintain different watch lists. You can maintain different stocks here. For day traders, there is a separate day trading guide for all the support and resistance levels. There's also a heat map. You can perform over S&P 500 or any particular uh, based on their capitalization, capex. So Apple has the highest capitalization. It was up by 1.88% yesterday. Nvidia was up by 3%. Microsoft was down by 0.1%. So that within this, this tells you, gives you an idea of how different stocks within one particular sector perform on a one given particular day. And you can even, not day, you can even go move to 1 week as well, or 1 month or 3 months or 2 weeks. You also can maintain your portfolio. There is a portfolio tracker, so you can create transactions and buy and sell stocks, and the portfolio will tell you that, okay, how much the value is, how much is the total loss, how much is the day's gain and loss there. So let's refresh it, the portfolio, and it will update this particular portfolio. And the portfolio was up by 0.37% yesterday, while up was 57%. Industry wise breakdown, gain loss wise breakdown for this particular portfolio. So the Tesla was down yesterday. That's why Tesla incurred a loss of $906 yesterday. But overall, in this particular, because portfolio, Tesla is up at $13,000, and there's another stock which was down by $2,000. So that's how you can keep track of your portfolio. All these features are right there in this particular software for Excel. So there was a question, do you need subscription for Stock Skinner IBD? Yes, of course. Stock Skinner, IBD Skinner are independent. They're marketed by IBD and different platform like stock charts, and you need an annual subscription for them. And it ranges somewhere between $300 to $500 or $600 a year. So because of my work, I have a subscription to a number of stocks, number of services, sorry. And that include, for example, all these resources, because I have to look at what different pundits and people, experts are saying at different places on different stocks, in addition to what we are doing, our trend indicator is doing. And then we come up, that's why our list is very short and very conservative. All right. Now, if you are, before I end, if you want to interested in my work and buy this software, is it available on my site? It's just for $99 one-time cost with free update for next year. It comes right now free with the weekly commentary, analysis, and stock picks. But effective 1st of January, the price will go up because of inflation and so many other things. The price of software will be $119, and the weekly commentary and the stock picks will no longer be free. It will be $9.99 per month subscription. But I will start adding new educational series for subscribers on selection, investing, and maximizing profits, how to use TR indicators, techniques, and methods. Now, there is a deal for all the people who are here that if you buy the software, even though you don't need software probably because either you're not using Excel or Excel for Windows, or you are using some other platform as software as well for charting, fine. But if you buy the software, you will get the software, but you get the free weekly commentary stock picks for the next entire year along with the software, which itself will be $120 value next year because of the subscription model which we are introducing. So if you want to get this deal, just do it before the end of the year and get the software for 99 and the stock picks and the commentary for next year. Yes, you can buy it on my website. The link is given here. I'm again typing it in the chat. 1 second, everyone. 1 second. Uh, Let me ask you one. I'm again typing. Any further question, or if you want, I can open the mic and let the people ask questions. But I think they do too much of talking. As I said, I will update it, but there's a lot of development work needs to require for the Mac and the Google Sheet. So unless we have a much broader customer base, maybe hundreds of thousands of inquiries, then we can put those funds and develop the software. Otherwise, I would urge that if you want that stock picks and analysis and the weekly commentary, then you can even buy the software as it is right now, and then you will get the entire thing for $99 for next year. While we look into how to we change it and develop the software for I can do probably I will do it I will develop it as Sierra chart as well, but I doubt that anyone here use Sierra chart, but because I developed the TR indicator and initially for Sierra chart. All right, any further question? If you want, I can open the mic for everyone, but again, I am using it for Excel for Windows only. The software is not for Excel for Mac. All right. My suggestion would be that even if you don't use the software or the VEC, Excel 365, one question, Excel, new version of Excel, because it's program in Excel, not the older versions, because older versions do not support some programming features. Okay, so I hope you like the work, you like this software, you like the commentary, you like my alerts. I posted on the groups as well as in my, by the way, our Facebook and YouTube and those. I will put it on the chat, and I hope you are member on threads as well. So we are on threads. An update on the software every time when we'll update the software, we'll send it to our subscriber. The software has been updated, and we'll email them a new version of the software. If you go to the Facebook, I probably forgot to put a Facebook link here, and it is there in the Facebook. Uh, this is the Facebook, and stock analysis. I will post the link for this Facebook page, and where normally the weekly commentary are updated every week. But any alerts or anything like AMD or Tesla or something like that, which I put on group chats, I also put on the Facebook as well as on the threads. Thread is like, for those of you, Thread is new, is like Twitter, and it's owned by Facebook. So we are on here on this is our, and if you have not seen this video, please take a look at this video available on the YouTube channel, or you can go to our threads page as well as there's a question about the which platform we buy. Platform could be of your choice. You can use E-Trade, you can use Interactive Brokers, you can use Robinhood, whatever. The software is independent of the platform. Any further question? If we, now there is a question that I can start with 5,000K. Now this is a personal matter, obviously. We are not registered financial advisor, but I will not give you direct advice on this. But yes, it doesn't matter. Why? Even a $5,000 or $25,000 account, you can buy a fraction of assets. So you can buy, for example, a big stock of NVIDIA, maybe let's say how much, 130, but you can buy $10 of NVIDIA stock or 0.5 NVIDIA stock. You can do that. There was a question that whether the TR indicator is available only in the Excel for the time being. I have a version for the Sierra chart, but I'm not marketing it because I have to develop the marketing version of it. Sierra chart was the original version, which I initially developed for my trading, because I do a lot of trading in Sierra chart. And beside that, Excel is used for analysis thing only, and developing that commentary and analyzing the softwares. Okay. If not any further question, then I would like to call it a day. Okay, the Wasim is asking, okay, I can open the, 1 second. I expect Wasim, you can unmute yourself, but I would appreciate if you can make it brief.
Oh yeah, okay. Thank you, Sabri. Mashallah, very good. As usual, very thorough. Just one question I had, which I wrote also, is
Can
that
you speak up? I think you're speaking from mobile phone.
yeah, I'm driving. So 1 second, let me see if I can transfer back to this phone. Can you hear me?
Yes.
Okay. So I just wanted to thank you. It was very thorough and very nice. I just have one question, that how do we find the top 5 stocks in your letter or in your software? If I go only once a week and I want to know, okay, which one is the best performing 5, and then I look into them and then trade them.
That's a very good question. Now, within the software, there is a TR scanner, but there is no as such screener. What the software does, you give a list of software to analyze you. Like you can give a list of 100 software, 100 stocks, and then you can analyze it in one go. Now your question is how to screen them out, right?
Yeah, you just work with the best.
Yeah, I'm coming to that. That is step number 1. Now for those 100 of software, unfortunately, because the data feed of the Excel is coming through Microsoft to Excel, then it has to download the entire data for all those thousands of stocks. That will make it very slower. Now it has a screener, having said that, which is known as TR screener. And what TR screener is right here, what it does, that you give a list of all the stocks in which you are interested, and it will, right here, it will tell you, screen it out and tell you the TR signal for those software either on daily or weekly basis. And it can also perform a back test of the TR indicator on a list of software or one particular software, sorry, at a time. Now, to answer your question, there is a scanner for the TR scanner because it will make the Excel slow down. It's not an independent software, it's working within the Excel frame of work and it's limited by Excel. So,
Okay,
so I will where I can ask you that you need to use some specialized scanner software for that. For example, if you go to the stock charts and you want you want to see which group is performing better. Okay. So I have a dedicated complete list of which I developed myself within this software, which is known as industry relative strength. And this is telling me which industry group was performing better yesterday or last 1 week. So last 1 week, computer hardware was the best group because otherwise every group was overall down. Okay. Or maybe last 1 month. Let's go to last. So the automobiles was best. Why? Because of Tesla. Now I can go to the automobiles, that particular group, DSAUS, and within there's a feature that then I can run as we have an advanced scanner. Now either we can from the sector wise or the group wise, then I can screen out which perform better. And then I come up with a list. Now I want a detailed analysis or TR scanner or their performance that I can do in Excel once I have the list with me.
Okay. So because you have multiple criteria, not only one. So I was thinking
obviously, I have multiple sources. I have screeners. I think I explained it to right here in this presentation. Strong underneath. I have these screeners. And from these screeners, from the market information, I come up with this and then I analyze with the software.
Yeah, so that's what I'm saying.
That's how it works.
Step is to find them based on the industry, and then from the best industry, then we take your next.
Sure, best group, leading group, and then leading industry. That's how we work.
And then the stocks in that industry.
In that stock within that group, within that industry.
Then your technical indicator.
Yes.
That will give us so much.
So that's so much. That's the work that I do when I prepare that weekly commentary. Because I scan out for a number of scanners, take out some stock, analyze, and then I put my. Now you want to use a software, you need to have some screener. Now the best screener for the software, for the stocks I have come up, I think is Trade Ideas. If I can share Trade Ideas.
Yeah, there will be many. No, I'm using Vector West, which does.
This particular company, Trade Ideas, I mean, they have obviously they have a number of different scanners. And then they create it with the AI and other, but obviously they have a subscription. It's quite expensive. Yeah. So I use different like IBD screeners. I use stock chart screener. I use my own TR screener and then come up with a solution.
Okay. Yeah. Thank you.
All right.
Thanks a lot, Sabri.
You're welcome. Any other question? If not, then I can call it a day. And thank you very much then.
I send you a private message when you get a chance. Please take a look.
Mr. Samir Khan?
Yes.
Okay, I will take a look and come back to you.
Thank you.
Thank you for your presentation. I will reach out.
Can you share the recordings later on?
Yes, unfortunately, maybe initial 5 to 10 minutes were not recorded. I just forgot to. But I will definitely record it and I will share it. Are you a member of that group, Muslim Halal Stocks group?
Yes, I am.
Okay, I will share the link of that YouTube recording in all the WhatsApp group and my Facebook page as well. That's why I appreciate it if you can become my Facebook subscriber, my page and Threads. I regularly post things over there.
Okay, can you send the Facebook link?
Yeah, it's on my website as well. Go to my website and you will see the Facebook and Threads link over there.
Okay, brother.
Okay.
Yes.
Yeah, Assalamu alaikum, brother Sabri.
Yeah, actually, I just joined late, and your indicator is good, but I wanted to buy it, but I missed some of the commentary there. How to navigate through that Excel. So, do you think the first 10 minutes has it, or is it what I missed?
I'm sorry. What's your full name?
Summer.
Summer. So your question is how do you buy it? Is what you're saying?
No, I can buy it, but actually I missed. I only listened to the second half of your
All right.
presentation. So, but I now even if I buy it, I missed how to navigate through that Excel. Through the software, and probably in those minutes
Okay.
initial present.
So you need any help? I mean, we can talk separately. Otherwise, you can watch the video over there. Have you seen that video on my website?
No, I did not.
Okay, take a look at the video. It's available on YouTube as well. It's I think 5 or 7 minutes, and it walks you
Okay.
through all the features of the software.
Okay. If I have any questions, then I'll reach out
Sure,
to
you
you.
can come to me
personally.
anytime. No problem.
Okay. Thank you.
Through the group or separately, or you have my email, please do so. So all of the participants, I thank you very much for their time and their passion, and they keep me engaged. And I would appreciate support from all of my colleagues and people out there, the customers. And definitely, if you have any questions, please feel free to reach me out and ask me directly. And as I said, that some people are asking that why it's not available for Mac and why it's not available for Google Sheet. That's in the pipeline, but it will take a long time because it needs a lot of programming resources. For the time being, if you want to keep on receiving the weekly commentary and the stock analysis for the next year, entire year, that's why it's free for this year. For the next year, it will be separate charges. And I would appreciate if you can have it, buy the software for the time being, and you get the free commentary for the entire next year. And as soon as if the software is developed for those versions which you are asking, then I will provide you a free copy of those version software as well. All right.
Thank you so much, Sarubhai.
You are welcome. Everyone is welcome, and have a nice, great weekend. And just be in touch. Thank you very much.
Thank you, Sajid bhai. Okay. Bye.
Thank you, everyone.
Bye.
Thank you, everybody.